Welcome back, guys. In this video, I'm going to teach you the difference between a market structure shift and a break of structure. I'm going to teach you how to spot them, and I'm going to give you guys a couple of criteria to look for when trying to identify an actual break of structure and market structure shift. Right. What's a break of structure? Is basically when price in an uptrend is when price breaks the last higher high. When it breaks the last higher high, what you have there is a break of structure. When you have there is a break of structure and so on. When it breaks the last higher high, what you have there is a break of structure. When it breaks the last higher high in an uptrend, what you have there is a break of structure and so on. When you break the last higher high, what you now have there is a break of structure. Now, what is a market structure shift? It's when price shifts a structure. It changed the state of the revenue. So price was going, its country was in an uptrend. So after it was in an uptrend, it now break lower, breaking below the previous higher low. So at this point, what you have here is called a market structure shift. The market has shifted. It has shifted its delivery. It was bullish, now it's now bearish. So at this point, it has shifted structure. So what we have here is called a market structure shift. Now, price continues to trade lower, and then at this point now we are now having a break of structure. So in a downtrend, a break of structure is when price breaks the last lower low. So this is a lower low that price, this is a break of structure price that just occurred, and this is also a break of structure. As price break the last lower low is a break of structure, and this is also a break of structure, and so on. Right, so this is how to spot them. Now, how do you identify a high probability break of structure and a high probability market structure shift? And this is something that I've come up with. This is something that um, after counted back testing, and also it has institutional interpretation behind it. So what I'm looking for before a break of structure, for a high probability break of structure, to be sure that this is actually a break of structure and price is going to continue to the bullish side, I want to see some form of liquidity sweep. Sorry for that. Let me draw this way. I want to see some form of liquidity sweep before the break of structure. So what do we have here? We have liquidity sweep. So liquidity was actually taken out. Then price traded to a key level. This can be a fair value gap in this range or an order block. Maybe it can be the order block. So I want to see a liquidity sweep into a key level, excuse me, before the break of structure. So what this means, one, you are tapping into a key level, which is serving as a base, as a support that price wants to use to rally up. And two, after you take this liquidity, it shows that institutions are behind the move, because of before you see any aggressive move, before you see any movement in an intended direction, there should be some form of liquidity sweep. So that shows that the smart money have accumulated liquidity before that move, so they are behind that move. These the criteria to validate a break of structure, to identify high probability break of structure. Sometimes you might not see these things and it's still a break of structure. But if you want high probability ones, it is you want to see key level and a liquidity sweep. And that is for break of structure. So how do you validate them? How do you identify high probability market structure shift? Now, what I want to look for is that I want to see this actual last break of structure, or it can be a liquidity sweep. I just want to see that price raided this previous higher high, the last higher high. It raided it. After I raided it, this is going to now, I'll now call this my liquidity sweep. This last break or sweep that is okay, I'll call it my liquidity sweep. Now I want to see an actual market structure shift, but I want to see price breaking below the last lower, the last higher low, right? Now something else I always look for is not compulsory, but if you can see it, it makes it high probability, is divergence with the correlated pair. Let's try to make this small. So what I want to see is divergence. Now for some of you that are not familiar with okay, let me try to draw these things and complete it. So what do we have here? Liquidity sweep. Let's try to complete it. Liquidity sweep, key level, liquidity sweep, then a key level. So what do I mean by a this thing, a divergence? What do I mean by divergence? For those of you that don't know what divergence is, if you're coming from ICT, listen, it's called SMT, Smart Money Tools or Smart Money Technique. What it means is basically a crack in correlation. So now, if the pair is making, if the pair swept liquidity, you want to see either one of the pair sweeping liquidity. If one of them sweep liquidity, you want to see that the other one failed to sweep liquidity, right? You want to see that the other one did something like this. So this is called a cracking correlation. The correlated pair, one of the pair, you can see that it actually took out this high, it swept this liquidity, but the other one failed to sweep this liquidity. So that's how you figure out a divergence or a cracking or an SMT. So you have to compare it with the correlated pair, the pair that is going in line with it. If this was an Euro USD chart, you compare it with something like GPUSD or DXY and so on. If this is something like let's say Euro CHF, you'll be comparing to GBP CHF, you guys get the point. So this is what I mean by divergence. So now to spot a valid market structure shift, you want to see a liquidity sweep into a higher time frame key level. There should be some form of higher time frame key level. If this whole thing is occurring in the 1 hour time frame, you want to look for something like a daily key level because that is the catalyst. That should be the reason. That should be the thing that staged the reversal. Like you want to see a higher time frame key level being hit, and then you want to see a market structure shift, which is the break of the last lower higher low, right? Then you want to check for divergence with the correlated pair. Divergence makes it high probability. Now the whole concept apply for the break of structure. What do we have here? We have price breaking the last lower low. And then if you want to spot the valid one, you want to see some form of liquidity and tap into a key level before the break and so on. Now, do you need all these criteria to meet before you can say this is a break of structure? No. In simple terms, a break of structure is when price break in simple terms, in a bullish wave of price. A break of structure is simply when price breaks the previous higher high, right? So that is a break of structure. And the market structure shift is when price breaks the last in a bullish, a bearish market structure shift is when price breaks the last lower higher low. That's as simple as that. But if you want to be able to pick the best setup, you want to be able to pick the best break of structure and you have to anticipate the actual ones that are high probability. You want to put in liquidity context and the key level, right? So because of liquidity is always taken when price really wants to go to an intended direction. Smart money likes to accumulate liquidity, and this key level that was tapped into shows price is resting on some kind of support that we're going to fuel price up. So this is the criteria, and this whole thing is just you can for the bearish for you can actually invert this to get the bearish distance. So what do we have here? We have price and forming series of lower highs and lower lows. All these things are break of structure liquidity sweep. Now for the bullish market structure shift, what do we have here? We have price sweeping out liquidity, then breaking structure, having a market structure shift, breaking the last lower high. Then finally, you check for divergence and you want to make sure it's actually occurring after it tapped into a high time frame key level. Then the whole concept applies. So let me give you guys live examples of this occurring now. So what do we have here now? Let me cut you guys here for a few minutes. So this is an update on the challenge we started with the team. If you guys are not aware, we actually started a challenge. The initial goal of the challenge was to accumulate $1 million in profit capital. After some time, I decided to break it down to make it modularly so it can be something that is a 3 months goal. So the goal was to start with the smallest profit, which is 5K, and scale up to 100K in profit capital. So the reason why I say this challenge is to help my students build capital. And we actually started this challenge, I think around late August, right? So this is an update I posted on the challenge. So the first 5K has been passed. The second one is up 3%. And we try to make withdrawal from the first one and use it to buy the next bigger profit, which is 25K. and that's how we scale up. And this is actually a proof of it. I bought the account, my student bought it, and you can see that we actually passed it. It's an 8% profit target. This is phase two. The phase one, I've posted it if you scroll up. So this is the second account we are trading, which is up 3%. Right, so that this update was on 13th of October. And the recent one we posted was on 10th of November, which is today. And the mission continues. The second 5K account has been passed. The next 25K account is phase one is currently up 2.7%. And the goal we are looking to do is to pass the 25K and make just 3% and withdraw this amount. This is in maths here. And we're going to use the profit to buy a 10K at the 100K account and make which will cost $500, then use it to pass it. And at the end of the day, so the goal of this next 3 months is to make 200K in profit funding, right? So if you guys are interested in it, and this is actually the proof of it, you can go through it. You can see this is actually the proof of the next 25K we have, but this one is up 20. This is up only 2.7%. And if you are to scroll down, this is actually a trade that I took on it as I'm about to pass a trade that is currently running that is about to pass to be passed, right? So if you guys are interested, you can reach me out on this Telegram channel. Just click the link to join the free group, and you can even scroll through it to see the proof or see the setup we are posting, and just send a DM to the admin. I'm going to talk to you personally. I see if you're a good fit, and if you're a good fit, I'll add you up. It will cost you money. But if you don't have the money to take the challenge, you can actually start doing the challenge on your own. All you need to do is to subscribe to the um all you need to do is to subscribe to this channel, to this free group, and take it. So not all setup I post are going to be that are posted for free. So when you see one, you capitalize on it, get a reliable platform, and set a 1% risk per trade. And if you and build a trading manager. So this is the you can go through this pin post and try to do the challenge on your own. It's key you challenge yourself. You want to go and challenge yourself. If you don't challenge yourself, you're not going to make money trading. That's the best way you can make money, by challenging yourself. But if you guys want to join my group, you can actually send me a DM. I think that's the best if you have the money. But if you don't have money, just try to do it on your own. So that's it for this. I just want to let you guys know this is what our mentorship is offering. All right, so let me give you guys live examples of this occurring now. So what do we have here now? All right, so let's start from here to read this market structure. What do we have here? We have a liquidity sweep. I don't know why my mouse is shaking. We have a liquidity sweep, and then we have a break of structure. This is where the break occurred here. After price breaks this higher high, this is where the break of structure occurred here. Then we have a retracement. Then we now have a break of structure. Now, at this point is where we got the break of structure. Now, notice something. We didn't have any liquidity sweep. We didn't have any form of liquidity sweep. And as you can see what price did here, price swept this low. You can see what price did. It actually swept this previous higher low that was formed. It actually swept it. But had you been this, we have some form of liquidity sweep here, and price tap into a key level. This become a protected low, and becomes very high probability, and rarely that price is going to take it out. So as you can see what price did, the price finally swept it out, and then after price swept it out, it formed the high and continued to this trend. Sorry, let me just stop this here to address my okay now. So now price now finally break this structure. Price finally break this structure. So this is our the swing structure we are working with now. So after price break this structure, what do we have here? Do we have some form of liquidity sweep? Yes, we have some form of liquidity sweep. So now after we created this swing high, right? This is our swing structure now. If you are to look at this place, do we have some form of liquidity sweep and price tapping into a key level? And in this case, we don't have it. And notice what price did here. Price came back and swept that low. as it swept that low, it's creating that liquidity sweep that we are looking for. Finally create that liquidity sweep, and we can expect price to break this structure. And if you even if we I want to show you guys, okay, now let's try to read this minor structure, this retracement. Okay, let's get rid of this to make our chart clear. So now what do we have here? We have price forming, this is a swing high. We have price comes down, forming uh, a swing structure, right? So we now have a retracement. Then price break the next structure, forming the next swing structure. Now we want to look to see if there's some form of liquidity sweep. And as you can see, there's liquidity sweep occurred. And notice, look at how price actually this this swing high was protected. Right, you can see as this swing high was protected, the price came very close to this swing high, took out this liquidity, but it didn't actually break this one swing high. So that's it. So that's because of the liquidity was actually swept. Now we now break the structure again. Then we want to look for, was there liquidity taken at this place? As you can see, before the break of structure, before okay, the break of structure actually occurred here. Sorry, you want to be very systematic. You want to be very systematic. You want, if you are to draw this thing out, you can see that this is where it got broken. And if you are to mark this high, you can see that this high was actually protected. So so this is where it got broken. So after this break of structure at this point, we want to look back to see if there's any form of liquidity sweep. So if you look at this, some form of liquidity sweep. So this high is, you can see that this high is protected, and price now finally give us a retracement, now break this structure. As price break this structure, now I want to look to see if there's any form of liquidity sweep, and there's actually small liquidity sweep here, but I don't think it's very clear to make sense something like this. But we can give this a benefit of doubt, or we can just call it that this is one time that it didn't fail, but there wasn't actually liquidity sweep here. So as you can see, there was no liquidity sweep at this place, and what the price did, it blows it out. And let me give you guys one more example. Alright, so this is what I mean by market short shifts. Now, this is actually a bullish market short shift. Now, what do we have here? We have price in a downtrend forming series of um, lower lows and lower high, right? We have price forming series of lower lows and lower high, right? Now, what the price did there, you can see that price actually swept liquidity. Now, break structure. Now, this is where the structure and the break of structure actually occur, right? This is an heavy break of structure, but the actual break of the actual market structure occurred at this high. So now, after this market structure occurred, we want to see if this thing actually tapped into a key level. We have gotten one criteria, which is liquidity sweep. Now, did it actually tap into a key level, a higher time frame key level? So let's go to something like the 4-hour time frame and look at this thing to see if it tapped into a key level. As you can see, it actually tapped into this other block, this fair value gap nested, this other block nested inside the fair value gap. You can see this. So what does this mean? You can see that this market structure is actually occurring in a key level. It's not just occurring randomly. It's actually in a key level. It tapped a key level. So you have having the second criteria. The third criteria is for divergence. This one is not compulsory, but it makes it hyperbolic. You want to see some form of crack and correlation. I'm not really good at checking for divergence with all these minor pairs, but I do think this is with all these exotic pairs. But I do think this is a something like Euro USD or DXY, GP USD, AED USD, NCD USD. You can just look for the correlated pair. You guys will know the correlated pair, or you can ask ChatGPT for it. If you ask ChatGPT, you can find it. But you're looking for the correlated pair. If this was Euro USD, I will look for GP USD or DXY. I want to see some form of crack and correction. Since this low was taken out, I want to see that the correlated pair failed to take out this low. What do we have here? We want to see it failed to take out this low. So it's something like this. So you want to see that it actually failed to take out this low. And so that's what I mean by divergence. So this makes it hyperability. So I hope you guys understand what I'm teaching in this video. By the way, if you're not yet on my free Telegram channel, I usually post free setups here. And I'm actually on I am actually on a challenge. I started the next challenge right? The current challenge we are looking to is to accumulate $1 million in preferred capital, but the actual goal for February is at 200K in funded capital. So that's what I did. So we're going to start with the smallest prop firm. So this is a challenge I took up with my private group for them to quickly accumulate capital. So that's I want them to build up capital first. So I did this challenge alone with myself, but I decided to bring it up for my and take it along with my private group. So if you're interested, you can let me know. Send me a DM to join the private group. It's actually paid, but it's not expensive. So yeah, but if you don't have money to do it, just take the setups that I'm posting my free Telegram channel and just look for get yourself a risk management plan. I actually posted one there and just keep trading consistently. Use the strategy I'm teaching you guys on this free Telegram chat on this free YouTube mentorship and use it and do it. You want to challenge yourself, that's something of that I really suggest you do. Challenge yourself. Alright, so that's it for this video. I hope you guys like it and do the whole YouTube stuff. Like, subscribe, comment. I will see you guys in the next video.